Good morning, Scott Redler, Chief Strategic Officer of T3Live.com. I want to do a quick little update on Apple because I do trade it often and I've been trying to put as much out there as possible. And I know it's been a crazy ride to the downside. It's been fast, it's been furious. The stock's come off about 25% off the highs. And I know that it hurts, it's emotional. If you're actually too emotional and it does hurt too much, you get too attached and you miss clues along the way. First, I want to quickly go over why this took place, how you could have seen a few things differently, and then the potential of Friday's outside day leading to a nice sized rally off that area. So if you take a quick look at the chart of Apple, you will see, first things first, this was the nice ride. This was after the last quarter's earnings where you had 3 days before, going into that gap and just starting a new run that went all the way up to about 703-ish. Okay, riding the 8-day moving average, only hitting the 21-day, once. Right here, you had a small little outside day. You really couldn't see it there. 700 and change unless you want to sell above there. Okay, then all the more power to you. I was actually long that day. I came in. That was actually September 21st, my 40th birthday. Came in. That was the first iPhone sales, 5 million versus 10 million. Anyway, look what happened on this day. This was the day that we did the little episode on Kramer talking about if we broke the 21-day moving average, it's got to turn into a two-way trade, not just a hold, both long and short. That I was getting out of my swing trade from this nice move that held the 8 and the 21. So that's when the trade changed, and then confirmation that that trade changed was when it couldn't get back above it. It couldn't reclaim even half of that down day. There was no commitment to any type of bounce. I know I played small bounces along the way. This was when it tried to bounce off the 50-day and then it closed below, another signal that it was still weak. Here's where it tried to bounce off the 100-day, another little tiny 3-day bounce. This move lower was even harsher. Then you had the small double bottom there that gave you a small tradable bounce to retest the somewhat neckline of the breakdown, and then you also had a little micro RedDog reversal right here showing you no commitment, and then we broke below the 100-day with some force, and then we just continued lower. We came to the 200-day, couldn't hold above it, couldn't even really bounce off it the way we did the last few, and then we accelerated to the downside. So here we are now. We've been looking for an outside day. We've been looking for a powerful reversal. Then finally, we saw it on Friday. If you take a look at the longer term chart here, you will see that a lot of people had stops in going all the way across. This last pivot here, I think, was what? Like the 530, 522. We went below it, came back above, and hopefully that was the washout. If you look here and you put in volume, the volume was immense. Okay, that's what you want to see on a capitulation type day. Look at this. Look at the volume here. Bigger than any of the volume spikes across this whole entire thing about, you have to go all the way back to last March. So anyway, 45 million shares. So the first strategy here is to buy through this RedDog reversal strategy where it went below 522. Okay, on that Friday, went as low as a heart-wrenching 505 and then came back above 522. So I tweeted about it. I was in the Trader Expo. I tried to get some people long. I also went long on Friday. I went on my virtual trade floor for my community to see. They saw me go from not long Apple to long Apple plus the spiders, and then it closed well. So the question is, what type of move do we get now? If you come to me, there are ways to measure it. If you took the RedDog reversal and you bought it, just say even a 522, the stock's up 7-8 points, always take a little bit off. Trim and trail, that's what we call it, that's what we say. Okay, so you want to feel good, you want to book a little bit. Some guys actually even started early. They were buying 511, 515. I got a little late start because I was going to speak, and I think I bought it somewhere, my average cost 520-ish. So with that said, I'll sell a little bit in the stock being up $7, $8. Then what I want to do is I want to see this gap up hold. At least 50% of it. If we're up $8 now and they try and sell it down, I want to see at least $4 stick. I want to see some power to it to back up Friday's move. And then from there, we could see some consolidation and we can continue higher. So if you go back to the chart, you will see first level for it to get through is right here. Okay, right there is, this is, your 532-ish area. Remember we tried it right here. This is 533.50, which we're above. So it would be nice if we gap up. Here's your gap up. We take back this moving average and stay above, just say 533 to 535, and then go sideways. And if the setup even happens in a way where we could do it, I do think you can get an additional buy above this 554, maybe some point later this week. So here's your reversal. We come into some resistance, go a little bit sideways, then perhaps we take out 555. And I do ultimately think that this snapback should lead to a move to retest the 200-day and this last broken support, which will turn into resistance around 573 to 583. So here is the first stage of the action that I'm going to be looking at and identifying and measuring, which I'm going to go over a few different times as the week progresses. But for right now, here's your Red Dog reversal. Hopefully you guys got long, coming right into resistance, sell a little bit, let it go sideways. You know what, if it's really powerful, who knows, it takes out. I've seen crazier things, but I wouldn't really expect it today to start getting through 550, 555. I think closing above 533 to 535 is a win, and then holding 50% of that gap. So at this particular point, just try and be unemotional. I've said it a few times, I'm sorry, over the past few weeks. Take Apple away from the name. Look at the chart action. Look at the price. It's been very weak. It's been much more of a short than a long. I know for me, I wasn't shorting it along the way. I was testing levels, and I started to get some paper cuts like everyone else out there. But we talked about how paper cuts, hurt a little bit, but they're not huge gushers and they can't put you out of business. A level versus a level makes sense. Hopefully if that was you, finally you got back involved Friday, you're getting a little bit of your money back, maybe even going green on it considering the size you might have taken or whatnot. And now the time is to see it build. Let's first, see these three areas of resistance, judge it, and I know a lot of guys want me to be saying out there, stock's going to be back above 700 at some time soon, but at this point, we don't know. All we know is we had a major reversal, had it on volume, we have levels to measure, we have action that we should see, and I do think there's a high probability that it does at least bounce back to 575 to 585 before major resistance comes into play, but that will be, weeks from now. So hopefully this helps. I'll definitely be leading guys through this stock. I'll be trading it every day, going through the, the Thanksgiving holiday and through Christmas. So stay tuned for more Apple activity. Hopefully all is well with you and have a great day trading.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.